Hi, I'm Russell Cummings, and today I wanted to talk to you about overall professional efficiency, which is just simply, looking at the measurement of efficiency in professional service firms and taking a slightly different approach to that. And this has been driven, by the current global skill shortage, which means we have less and less good access to good quality skilled people. And as a result, I think we have to focus on A, attraction and retention strategies, B, getting our processes and systems really efficient and applying lean to our business in a way we probably never ever thought about it before, and then lastly, supporting that with good technology systems and stuff to give us some efficiency as well. So today I just want to touch briefly on the professional efficiency, on the process stuff. So I want to apply some leading edge thinking to improve productivity in professional service firms. Lean is about changing, the way we think. And for me, the application of lean can be at a business level, a team level, an individual level, depending on how we do it. And the lean model that I use is around, we need to have four key components if we're going to be successful. We need to have a clear mindset that's focused on productivity and improvement. We need to use good processes and systems. We need to apply tools and processes to help us actually deliver on this. And then we need to hold ourselves accountable and committed to the process. So at a lean level, at a business level, the mindset's about philosophy, culture, focus, that sort of stuff. The processes could include, lean, scrum, agile, project management methodologies, that sort of stuff. The tools, there's a range of tools we can use. And then in terms of commitment, that's about project management, again, and accountability. Drop it down to a team level, and the whole thing changes slightly. We drop it down again to an individual level, and we've got lots of other things to look at. But lean for me is about changing your approach. And for me at the moment in in service industries, we don't take the same approach that manufacturing takes to this problem. And we treat it as a very different thing. And we often do that simply because we go, we're not making widgets that are all the same. Every job is different. But I've been into manufacturing facilities where they make every job's bespoke, every job is different, and they still use lean processes to be highly efficient. And therefore, one of the big changes we make is in improving processes, you need to measure the process components, right? Not the outcomes. So in a manufacturing process, we measure how many units we put out, what the productivity per day is, all that sort of stuff. But the real measures come down to how long is it taking us to do a certain process component. It might be putting a label on it, might be putting something in a box, it could be manufacturing a component. We try and get those times down, and we're actually measuring process components, not the outcome. Whereas in professional service, we just tend to measure the outcome. We don't really look at process components. All right, so if we're going to do that, then a big component and a big thing in lean is about flow. And flow is this concept from the Toyota production system, which is where lean comes from. And it's all about maintaining the flow so that the elements in the process are constantly being worked on or are moving through the process. Because batch processing is inherently inefficient. And there are lots of different business games you can play to demonstrate this, but you probably have to take my word for it today, but batch processing, we think it's more efficient, but when you get down to it, it's actually way, way less efficient. And a continuous flow process where the job is worked on continuously as it moves through our business till completion is much, much more efficient than a batch processing, right? So the question is then, how do we move away from batch processing towards continuous flow? Some of the things you might think about, an accounting firm, for argument's sake, you can actually have their zero file updated every day. So the data is basically live. You're doing all the transactions, you're picking up the issues, you're getting the documentation you need, and you're then also doing a lot of the tax journals and those sort of things that you can do every day live with the client, so their data is live. And keeping that flow happening so that when you get to the end of the quarter and you've got to do the BAS, it's really a matter of review and press a button. It's not a lot of processing. All right. Measuring process weekly, not monthly. We often do things monthly. I guess we were just talking about reconciling bank accounts. in the good old days, the bank statements turned up in the mail once a month, so that's when you reconciled your bank account. Now your data's live. There's nothing to stop you reconciling every hour if you want to. So we often measure progress on monthly basis and stuff for no real reason. And what that leads is to us to have a really busy final week in the month or the quarter or whatever, as we're really struggling to get things done on time. And my experience is, if we break that down and have weekly targets and weekly output targets and what we're going to do, then all of a sudden it takes the pressure out of the week. And then you'll if you're behind at week 2, then that you may not meet your monthly target. What changes you have to make, and then rolling totals and those sort of things give us more context by giving us than just a snapshot in time where you're comparing this period to last year's period. But simple timing of holidays and events and all sorts of things can really throw that out and make that information garbage. So let's talk about OEE. So overall equipment efficiency is a ratio used in manufacturing, and it's a measure of process efficiency. And it comes out of the need to keep the process running rather than keeping people busy. And I find we do this in service industries as well. We have lots of people being kept busy, but the process is not kept running, right? The process stops and starts. We pick up files and we put them down. And therefore our focus is on keeping busy, not on the process. All right. And then in overall equipment efficiency, we break this down into 3 key areas. So if we're looking at a process, let's say it's a production line, we would look at availability. So we look at how for the length of the shift, how many hours was the process actually able to run? So the production line actually able to run gives us a percentage of the time it was able to run. How much product did we produce against how much product should we have produced using a standard rate? Which gives us a performance percentage. And then lastly, of the product we produced, how much of it was acceptable quality, and that's a quality accepted. And then we look at, that's how you calculate it. I won't go there. You can look at that in the slides. And then there's 6 major losses that we would look at in order to see what we can do to improve each of those. So I've then been thinking, how do we make this work for professionals? And so what I've done is said, righto, there are 3 key areas we could work on. One is availability. So of the amount of time available in the days of people work, if we take out the standard time that we give them for staff meetings and training and development, business development and travel and a few other things, we take those out. You can even include leave if you really wanted to. We take that out of the total hours available. We end up with an availability figure of the time available to charge to clients. Of that time available to charge to clients, how much time did we actually charge to the WIP or charge to clients is our performance measure. And then of the time we charge to clients, how much of it were we able to invoice? All right, so that's the amount of invoice. So overall professional efficiency is of the total hours we worked, how many hours were we able to invoice to clients is the ultimate measure. All right, and you can use that then to calculate some other things. So if we think about that, then there are probably some major losses in this space. Availability, we've got leave, we've got structured non-chargeable time that we agree on, right? Then in terms of performance, there's reduced speed, so people are not having a good day for whatever reason. Idling and minor stops is interruptions and waiting for data, waiting for information, waiting for decisions. And lastly, non-chargeable activities where we're putting down admin and a hope of other things that would suck time out of the time that's available to spend with clients. And then lastly, chargeability, which you remember is amount invoiced versus how much we've got on the WIP. That's a function of defects and rework, it's a function of scope creep, and it's a function of timesheet errors where people are either not putting time down or putting down too much time against a particular activity. And we can think about those things. So here's an example. Typical business, let's say this is over a series of months. We've got 10,000 total hours worked. There's 8,000 hours. Once we take away all these things, there's 8,000 available for clients, gives us 80%. We then have, of those 8,000 hours, we charge 6,000 hours to give us a 75% performance. And then of the charged hours, we invoice 4,200 hours. So we had a write-off essentially at the end of 30%, right? Now, these numbers are high or low. I don't know where they are in terms of your business, but there's just examples, all right? So what we then do is multiply 80% by 75% by 70%, which gives us 42% OPE. Now, the aim is not about getting to 100, because if you do the numbers, if we're 90, 90, and 90, we still only get to 73%. And if we're 100% and 90, 90, we still only get to 80%. So it's not about getting to 100. If we're in the 60s, that's good, right? That's a really useful place to be at. And we want to aim to be up around this 70% if we can. Okay, but it's not about being there. So then you just look at this and say, okay, where do we need to focus our attention and what can we do? And then we go back to the major losses. So what can we do to reduce the amount of non-structured, non-chargeable time? Can't do much about leave. And therefore, I don't tend to include it in my calculations a lot. It wasn't in that previous example, but some people want to include leave. In terms of performance, how do we get people to not work harder, but just work at a higher rate? How do we get rid of the interruptions and that sort of stuff? How do we get rid of the non-chargeable activities that creep in here? And then lastly, it's around defects, rework, scope creep, timesheet errors. How do we make sure people are putting the right amount of time down, not as a punitive thing, but as a performance improvement system? If we don't measure it correctly, it's going to be really hard to manage it. So really important that you don't use timesheets as a punitive thing. So then it's about saying, well, what processes can we use to really drive this? There are two things for me, two sides of this productivity coin. One is around process improvement. So that's about I guess for me that's around the lean tools and really driving process improvement and looking at how do we improve our processes and things. And then coupled with that, I think is focused execution. So it's one of the things that's often overlooked in professional service firms. We have really efficient processes, but we're not focused on the execution. And I think the Scrum tools and processes are brilliant for that. And I've started thinking about, Scrum for professional service firms, particularly for accounting firms. All right. So next steps, start having a think about this stuff. Calculate your OPE figures for your business and see how they stack up. I'm really happy to have a conversation with you and help you explore this further. My contact details are here, so make sure you either pick up the phone or flick me an email or a text. All right? Let me know how you go. Cheers.